Welcome to Investors Insights. Our topic today, decisions and deadlines. My name is Greg Powell, president of Five Plan Partners, and I am joined by my distinguished colleagues, Bobby Norman and Ty Miller. Gentlemen, good morning. And thank you for all the hard work you did over the weekend in preparation for this vlog. Our topic, decisions and deadlines. Last week, there were deadlines for tariffs. Last week, there was deadlines for the Fed to talk about interest rates. There's a lot of deadlines going on, and we're also seeing the rippling effect or the beginning of that rippling effect of those decisions. So, folks, we want to answer your questions. We try to do that on Facebook, LinkedIn, Twitter, YouTube, our podcast. But this is always a very special time for us on the vlogs to, as you've called us or asked questions, we want to answer them. So, Bobby, we'll ask you to start first on tariffs.
Yeah, so we said early last week that there was a lot of information that could move the market, and that was the case as market volatility spiked. Last week was as big as it gets on the macro front with the GDP print, employment print that came in lower, with lower revisions of previous months being the big story. We had the Fed meeting. We had Trump's tariffs deadline. So from our perspective, though, the most important downside risk for the market was the hawkishness of the Fed chair, who seemed really defiant against any September action or rate cut over his insistence that tariffs are inflationary. And then Friday's weak payroll print really puts a spotlight on Fed Chairman Powell going forward. And the first thing to know is that August is historically a volatile month anyway with lower returns. So it wasn't too surprising to see the market react negatively to the events of last week. So let's address tariffs. As you can see in this first chart, there is good news that the results after the announcement of every new trade deal made on Thursday night has led to smaller tariffs. This next chart actually shows which countries have made a deal on tariffs, shown in blue, and those countries that have not made a deal shown in red. It's obvious that countries who are making deals are in better shape. But let's address the surprisingly weak jobs report that came out on Friday, which caused a market sell-off. You can see in this jobs chart that 73,000 jobs were created last month. It was lower than the trend, in that the revisions made in May and June was what really spooked the markets. The report showed that the Fed should have already been cutting interest rates, especially last week. That was our takeaway from the package of data, including the weaker U.S. payroll employment number. ADP's employment report signaled this concern months ago. And so now the Fed will probably have to cut rates in September, following what other global central banks have already been doing this year, and then continue to cut Fed funds rates as we move into 2026. Then this is important. We expect Fed Chairman Powell to signal a change in the outlook at the Fed's Jackson Hole meeting later this month. That's going to be an important meeting for the market. But I think at this point, we need to take a deep breath and think about where we are at this point. The calendar is no friend the next 10 weeks or so, but there's considerable support beneath this market. So looking ahead to the rest of this year, the situation should improve. So you got to think about the recently passed U.S. tax bill. That should provide further boost to corporate spending. Deregulation should also support activity. There's no doubt that last week was a tough week, but there is time to course correct here. So credit conditions still look benign. Initial jobless claims came in at 218,000 last week. That's indicating that we're not seeing a negative impulse cascade across the economy, resulting in large layoffs. So we will continue to review the reports carefully over the next few weeks to see if last week was a one-off or more part of a bigger trend that we need to be concerned about.
Bobby, that's great detailed information. That took a lot of time and effort to put together, and I thank you. Well done, well said. And in relation to that, Ty, you also did some great research looking, at in conjunction with the Fed rate cut, consumer spending, things that are going on. So go on and elaborate on that in relation to what Bobby just said.
I'll go on and kind of build off of Bobby's point with the Fed. I think one interesting thing, Bobby made the point that perhaps the market reacted as they should have already, cut maybe in this meeting in September. It seems to be live for a rate cut. But what was interesting is for the first time since 1993, we had two members of the Fed go against their decision. So they call them dissenters, but essentially two members of the Fed disagreed with the decision and thought, they should have cut now. And so usually, I mean, you got to think the Fed, from what I've heard, all their offices are right next to each other. Essentially, they're talking about this stuff all the time, and then they're coming out every 6 weeks or so with a report. So usually they're on the same page. To have two people kind of disagree shows that, obviously President Trump has been very vocal of his disapproval with Jerome Powell, and it just shows that, not that the Fed is in turmoil, but there is some, maybe indecision there or some stuff going on behind the scenes. We also had a member of the Fed, kind of forgo the rest of her term. And so that was, a little bit surprising. She resigned as well. So, just some things.
That just recently happened. That's news.
Yeah, that just happened this week.
Yes.
So a lot of interesting things with the Fed. So to Bobby's point, they are very important. It's going to be interesting to see in the upcoming meetings with Jackson Hole and the September meeting what they decide to do. But before then, we did get a GDP number for the Q2 up 3%. So great headline number, 3% U.S. real GDP growth. So is great. That's something we like to see. When you dig into the numbers, though, so it tells a little bit of a different story. Consumer spending still strong, which is what consumers 70% of GDP. Very important that they are positive. Very important that they're confident, spending money, everything like that. Where the somewhat concerning parts are is we got a 5 percentage point increase in trade, because if you think back to Q1, trade was a huge problem, right? Inventories were a positive contributor because and trade was a negator. So what happens is before in Q1, tariffs are announced in April. Everyone's kind of front running all these, bringing in goods and everything like that ahead of the tariffs because they know April is coming up. Well, then April comes and April passes. We have our decisions on tariffs. We get a delay. All of a sudden, people aren't front running that as much. You can only front run it one time, right? So essentially, at this point, inventories were a little higher, but net exports trade was a big contributor because we're not really trading as much at this point. Everyone already got the goods they needed to. So Q1 and Q2 GDP, I think if you look at it as a whole, probably didn't tell us a ton because of just the big volatility in the trade aspect.
Right.
I think now that some of these tariffs are getting in place, I think Q3 will be kind of a more of a baseline of going forward of what we want to see in GDP or what to expect.
So you heard Bobby earlier say, folks, that the calendar is not your friend over the next 6 weeks. We're going to be watching everything closely and navigating through that. From Ty's standpoint, and Ty, you did a phenomenal job there. Thank you, because that's a lot of additional detail that emphasizes what Bobby has also said. And I hope everybody, as our viewership, understands the effort and the time it takes to look at all the variety of research that we get to then bring it together on the portfolio strategies team to coordinate it in relation to your financial blueprint and also your portfolio. We hope you have a great week. August is not going to be dull, but that's okay. We will keep you updated throughout, and just know that every day that we're here, we're striving to make sure, doing everything we can for our clients' lives to be better, richer, fuller. And thank you for sharing these vlogs with others. It means so much to us. It's a huge compliment, and we will talk soon. Thanks.